Hi there, Miranda Alt here with Keller Williams Success Real Estate and the Miranda Alt team with your Monday market update for Monday, May 22nd, 2023. Thanks so much for watching. A quick look at our Montgomery County numbers for the last 7 days. We had 169 new listings, 142 go under contract, 108 closed sales, 38 price changes, 49 on the private network, and 1 expired. Now, why do I keep track of these numbers every single week? Well, because by tracking these numbers in Montgomery County specifically, because remember, real estate is hyper local. So even what's happening in the city of Chicago might not be the same thing that's happening in our real estate market out here in Crystal Lake or out here in Woodstock or Montgomery or Harvard. So I really try to focus on what is happening in our hyper local market. So in Montgomery County, what we're seeing is we are finally seeing more new listings than those going under contract. Some of that is due to the increase in the interest rates. So right now, this last week, we had 169 new listings and 142 go under contract. Now, I've been tracking these numbers for over 2 years now, and it is very rare that we have more new homes hit the market than go under contract. So what this tells me is that we are seeing an increase in our inventory. Now, when I'm out and about looking at houses with my clients, or I'm looking on the MLS trying to get more information for my clients and trying to find homes, I will tell you that I even feel like we're getting more inventory. I feel like we're able to go look at 4 homes instead of just 1 when I'm taking a buyer out. There's a little bit more to choose from. So we are definitely seeing an increase in that inventory. Well, what's that going to do to prices? Well, right now, prices are still holding very steady. We are not seeing much negotiation happening on a seller's part for the price. We are seeing most homes still selling at their list price or above. We're still seeing those multiple offers. I just was looking on the MLS today. There's several homes that are calling for highest and best. So we're still seeing all of that happen. But over time, if this trend continues, because this is now the second week in a row that we have had more homes get listed than we've had go under contract. So if this continues over time, we are going to see us shift into a balanced market or maybe even a buyer's market. Now, that's not going to happen anytime soon. So I don't want to send alarm to anybody or let any of those buyers out there think that they're going to get a negotiating power and get a home, for $20,000 under list price. That's not going to happen. We're not there yet. But by tracking these numbers for the last 2 to 3 years, I'm able to maybe see trends that might be coming that maybe won't be reported for a little while. So I'm calling all of my sellers who are maybe sitting on the fence and thinking, I don't know if I want to move. I don't know if I'm going to sell yet. Maybe I'm going to wait till the fall. Maybe I'm going to wait till, next year. You might want to take advantage of the seller's market that we're in now, because we're still in that hyper seller's market right now. But that could change. And I do think that we're going to see that change, especially with these interest rates. We're at 7% for most people right now, and even higher than that, depending on, of course, your income, your credit, your debt to income ratio, and all of those things that factor into your interest rate. So we are going to see more inventory come to market. And if that happens, and more buyers backing out of the market because it's simply become too unaffordable to buy the home that they want. Because let's just take, for example, somebody looking for a home at $350,000 last year at a 3% interest rate. And actually by this time last year, we were already at 5.5%. So even at 5.5%, somebody looking at $350,000, well, that $350,000 is going to cost them a lot more per month. Their monthly payment is going to be higher this year than it was last year. And that's affecting people right now. And some people are backing out and saying, we're going to wait for interest rates to come down. Now, Lawrence Yun, the chief economist for the National Association of Realtors, has come out and said that he does think that we're going to have interest rates going lower by the end of the year. Hopefully the feds are not going to continue to increase the interest rates. If they increase the prime rate again, we are going to run into even more trouble, and we'll probably see these numbers become greater, meaning we will have more inventory. We will see us shift into a fair and balanced market. Remember, we measure our markets by months of inventory, how many months it will take to sell out of whatever is currently listed. Anything under 4 months inventory is a seller's market. 4 to 6 months inventory is a fair and balanced market. Anything over 6 months inventory is going to be a buyer's market. We still have only 1.5 months inventory in Montgomery County, so we're still very much so in a seller's market. But if these numbers continue, where we have more homes being listed than we have going under contract, we are going to see our month's inventory increase. What is that going to do to prices? Well, anytime you have supply that's low and demand that's high, prices go up. Well, if we see that demand start to decrease due to the interest rates, and we see that supply start to go up because we have less buyers in the market, we're going to see those prices start to come down. we're going to see a retraction in our market. If you're a buyer, that's a good thing. If you're a seller, not so much. Now, as always, if you're a seller somewhere, you're likely a buyer somewhere else. So in my opinion, kind of all tends to even out. But if you're maybe a seller and you're not buying another, maybe you've already got another house and you're just getting rid of one, it's a great time to be a seller. If you're a buyer and you're renting right now, my answer to that is you're always paying 100% interest rate when you're renting. So it's always a good time to buy if you are a current renter. So let's not sort of miss that message that it is always better to be a buyer than it is a renter, especially right now. Last week, I had another client call me and say, I can't, I'm going to be paying $3,000 a month for rent. I just can't believe that I'm going to rent. Now that person is renting because of their credit and they simply can't get a mortgage right now. However, they're working on rebuilding their credit because paying $3,000 a month for rent is just absolutely astronomical. It's absolutely insane. And it's just like lighting your money on fire. So we're going to get them situated with my lender and get their credit improved so that they can buy next year and not be paying that crazy rent anymore. But basically what we're having is that we still have a seller's market, but we don't know if that's changing. Hopefully interest rates will start to come down in the coming months. Obviously, Barry Habib, who I follow, I still follow him very much and still think he's great, but he missed the mark a little bit on that May 10th. We had some different factors play into that caused that May 10th date to come and go and to have our interest rates still going up. Hopefully we're going to get a reading in June that's going to be more favorable with inflation. We'll see inflation coming down, and that should result in lower interest rates as well. I'm Miranda Alt with Keller Williams Success Real Estate and the Miranda Alt team. Please call me if you have any more questions, if you'd like to discuss any of this further. I'm at 815-529-0777, or as always, you can reach me at mirandaaltteam@gmail.com. Have a great day. Bye.